I'm Jim Pierce with Baton Investing. Every day, people like you come to us when they realize their current investment approach just isn't working. We give them an easy-to-use system that has beaten the S&P 500 by more than 300% since 2003, takes just 30 seconds a month to use, and most importantly, will help you realize your financial dreams. Now, usually I recommend a company that is currently held in one of the 3 original Baton stock portfolios. But today I'm going to talk about a stock that is part of our newest portfolio, which we call Winners, because every stock in it has proven that it can outperform the market even if it no longer qualifies as one of the 10 highest scoring stocks out of the thousands that we evaluate. Now, that company is ePlus, which is a small cap tech stock that has been sneaking up the charts. Fortunately, our model noticed it at the beginning of this year when we could buy it at $66 a share. So at its recent price of $79, that's a gain of 19% in less than 6 months. Now here's why this stock is doing so well. Now again, the company we're talking about is ePlus, symbol is plus, P-L-U-S, up 19% since January 5th. Now as you may know, we evaluate every stock based on 10 different models, based on 10 of the all-time most successful investors. 2 of them, Peter Lynch and James O'Shaughnessy, still score ePlus very highly despite the fact that it's already increased this much in value. Now, as you may know, Peter Lynch was legendary mutual fund manager Fidelity from about 1977 to 1991. The average annual gain in his portfolio was about 27–28% compounded, which is pretty amazing. And he did that using an approach that he called growth at a reasonable price, or it's sometimes referred to as GARP. And what he was looking for were companies that were growing their earnings faster than most other stocks, but still priced as if they were an average company. So he would use something called the PEG ratio, which compared a company's PE ratio to the rate of growth in those earnings. And if that ratio was less than 1.0, that suggested that the market was underpricing the rate of growth in those earnings. Now, in the case of ePlus, its PEG ratio is 0.44, meaning it could still double in value to 0.88 and still be well below Lynch's threshold of 1.0. So it earns a score of 93% according to the Peter Lynch model. Now, James O'Shaughnessy, not as well known as Lynch outside of Wall Street, but very famous within Wall Street because he researched over 40 years of stock market performance to identify which variables correlated most highly to success. And after years of research, he concluded that really there were only a handful of variables that consistently pointed to stocks that were likely to outperform the market. And for growth stocks, in addition to what Lynch was looking for, O'Shaughnessy liked to see what he called persistence in earnings growth. In other words, this PEG ratio is a snapshot in time from the present. What O'Shaughnessy looked at, he wanted to see 5 years of consecutive growth in earnings. And he also looked at the average annual rate of growth in earnings over that 5-year period, which for ePlus is 28%, which means on a compounded basis, they would be doubling earnings about every 3 years. So when you combine Lynch's PEG ratio with O'Shaughnessy's persistence measurement, ePlus appears to be a company that's still significantly undervalued. Now, the Baton Winners portfolio is just one of 4 portfolios that you can use to grow your wealth. If you want to know more about how the Baton system works, just visit batoninvesting.com and click on How It Works. There's also a simple 3-question assessment you can take to determine if Baton is right for you. Now, we can't help everyone that comes to us. Usually only about half the people who take the assessment determine that we're a good fit, but maybe you're one of them. So go to batoninvesting.com now, and I'll see you soon with another free stock tip. Thank you.